I have a surprise for you. I have a dear friend with me today, Karthik Rangappa. I know him for 12 years, 2014?
14, yeah.
So Karthik and I may know each other for 12 years, but believe it or not, we've never sat down together and actually done a video.
Yeah.
So I think we've taught a lot, but we've not shared experience.
Yeah.
So maybe we can share 2, 3, 4 mistakes we've made on our entire investing journey today.
Yeah, I mean, there are so many, but 2, 3 is a good number for this video, I guess.
For me, I think it was very different. I was very interested in trading. My entire thing was, why should I wait for Nifty to go up 10, 15% if I can catch the ups and downs 20 times? And from that same 10% move, I can capture 20% or 30%. My turnaround will be so much that the movement matters more than the distance it covers.
A dream customer for a broker.
Which is why Nitin Kamath loves me.
Yeah.
By the way, Karthik and I are thinking of doing more of these sessions on both these channels. So if you think you like it, let us know in the comments. And also subscribe to both of the channels so you can see the next collab that we do. They used to be mini Nifty. So I said, okay, I'll focus on mini Nifty. And this weird movement used to happen in markets, Karthik. Market used to gap up, fall a little bit. And just 20 minutes before close, it used to rally a little bit. There used to be one green candle. So I was trading during this time. I obviously didn't know market would do this. So I was buying Nifty, some moving average, some crazy strategy I would use. And then once I was in, the market would exit at break even because it would basically do nothing. Now, over a period of time, I think it was probably a month, the market moved up, let's say 12% up, but it gapped up every time.
Yeah.
So intraday, there was no movement.
Yeah, it was all in the gaps.
It's all in the gaps. And I lost maybe, I think, 4 or 5% in transactional fees and slippage and just entering, exit and all of that. And according to my back test, there was one trade where I could have made like a lot of money, but I missed that one very trade. And some trader, we were in a group, some trader said, dude, if we had just bought Nifty and went to sleep and woken up the next month, we would have 12% plus in our portfolios. We've lost money and a little bit of hair.
I mean, I'm guilty as charged. I've done this several times when I was actively trading.
Yeah.
But it's actually a super simple thing for anyone to do, right? If you have that view, the easiest thing is to just buy an index fund or an ETF and just let it be. I think over-optimizing for returns in turn actually makes you lose money.
But do you,
I've done this as well.
what techniques have you tried to do?
Different techniques, but the point is you try to overtrade.
Yeah.
Somewhere along the way, you make a loss, you want to make up for it. So you put in another trade, it keeps sucking you in. So overtrading is...
But you had a strategy.
Yeah, I mean, two strategies that I was following. One was pair trading. I used to love pair trading. The other one was breakouts. Right?
Triangle breakout, rectangle breakout, sideways breakout.
Yeah, all those things. So, and I used to love trading these breakouts, especially around quarterly results. So because technically there was some formation, some chart formation that would give you that signal saying a breakout is about to happen.
Yeah.
And then you correlate with the fundamentals, quarterly results, how was their last 3 quarters.
Take your position.
Yeah, take position and wait. So
I have to ask you this now. I did not ask. So what do you think? Do these patterns work? Here's the question. So we have some consolidation and according to technical analysis, let's suppose it's a continuation pattern.
Okay.
And let's suppose company is growing and all. Now, if it breaks out and continues, how will the trader think? If it does a false breakout, does this work?
So that's the... I don't know if it works. So your guess is as good as mine. But I think whenever there is momentum in the market, if there are fundamental triggers, could be through a quarterly report or some change in P&L or change in business, new greenfield project or whatever. There should be a fundamental trigger. So when you put both these things together, the odds of you making money kind of increases. Yeah.
With trading, I think you need to get accuracy and timing together,
Yeah.
which is where things mess up.
Yeah.
And I think for me, I understood much later that the prediction doesn't really matter, and maybe just the risk reward if you can manage. There's one more thing I wanted to add. While I was doing that trading for the markets to go up, right, and we were doing, I said, okay, instead of marking my entry exit, let me mark the entry after costs of transaction. And then I realized the market has to go up a lot intraday for me to actually make a risk reward of 2 or 3.
I think if you're over trading, obviously these costs add up, right? I mean, and it'll eat into your P&L, your capital, and your strategy is such that it itself kind of eats into your capital. So may as well not do it.
Yeah. So I think what I learned was that every time I tried to do something complicated, it ended up not working over the long term. I could get lucky a few times.
Yeah.
Now, I think something, if I do very simply, and it's very simple, it works out well. Anyway, coming back to your investing journey. So, Karthik, 2008 markets going up. You're already doing SIP. I think 2 years in, right?
Yeah.
So, how are you feeling? And then what happened after that?
Biggest, advantage for me, because I've lived through that 2008 crash, everything else doesn't feel like a crash. So I'm kind of glad I went through that phase. So and continued whatever I was supposed to do.
Did you stop your SIP?
No.
You went on.
Yeah, the only time I.
This is why I don't like Karthik. This is precisely why I don't like. Any normal human will stop their SIP.
Yeah, but the only time I've stopped is when I try to time. And that's when the one big rally happened in the market. So I haven't stopped my SIPs ever. Have you been through any of these big crashes? And what has been your behavior? What have you learned about yourself during these crashes?
I mean, not great. 2008 crash, 2020 we saw, and everything in between. 2007 is when I started trading. So 2008 happened. And 2008 is when I famously in the office, everyone knows, shorted 2 or 3 lots of mini Nifty because there was a trend line break. And then I thought it'll fall like 1-2%. And it just crashed and my money doubled.
Okay.
But the capital was very small. Of course, it was fully luck.
Yeah.
So I was very happy when the crash happened because I had no portfolio. I just had the mini futures short, mini Nifty futures short, and I was working somewhere at that point. And I covered up the short. I was very happy. The market continued to fall. I said, "Oh, the money could have tripled." But pure luck, it was just nothing. So that's how 2008 went. 2020, I think something significant happened. By this time, I had become smarter. I know about markets, all of that. And I became obsessed with the PE ratio of Nifty.
Okay.
So there was a fair valuation of Nifty and the 2020 crash happens. And I said, I will not buy at fair valuation. I will buy cheap. Because
margin
Warren
of
Buffett,
safety.
Margin of safety.
Yeah.
Margin of safety, Warren Buffett, Charlie Munger Bhaiya said, okay, I will wait for the market to fall enough. And I arbitrarily decided at this level I will buy. And also told Swati, we will both wait until market falls here. Last time crash happened in 2008. The market continued to fall. A V-shape recovery never happens. Don't worry, professional.
Yeah.
And our investments at that time, we paused, we stopped.
Yeah.
Super ashamed to say this, that I was like, we will wait for the market to fall and we'll deploy lump sum. So very similar, I guess. And we waited and we just saw the market V-shape reverse and just saw our previous portfolio do well and our cash that we had give absolutely no returns. So this actually felt quite bad because I felt very cold and calculated on the Excel sheet. But because we could not, if I just continued an SIP,
Yeah.
and it would have been beautiful, perfect.
Yeah.
But yeah, so that was a big mistake.
Yeah. I actually have a similar story. This is me trying to time a stock investment.
Yeah.
Okay. I was tracking the stock, fully convinced that it'll do well. The stock was around 50 rupee mark. I even placed an order. I didn't want to give a round figure. I'd put a 10 paisa extra, so I wanted to buy it at, let's say 50.1 or whatever.
Right.
The market stock price fell 5 paisa away from my buy price, and my buy order never got triggered. Ideally, I shouldn't have been so smart and try to time it, try to put a price, specific price, and I should have bought it because I'd done my homework. I knew the stock was attractive. I knew valuations were good. 10 paisa here and there doesn't really matter, and I knew that I'm going to hold on to it for a fairly long time, right? Ideally, I should have bought it the next day, but the stock was up, I think 0.75%, 1% or whatever. I was like, no.
Wait.
Yeah, I should wait. In my mind, it's already, being, yeah, I should wait.
It's very common, actually.
Very, very common. Yeah. I think what is this called? Anchoring bias?
Yes, yes.
Yeah. So I was fixated on a particular price for this stock.
Married to the paisa bias.
Exactly. So my price never came. So the price that I had put, I realized later was the lowest price. So that price never,
Where did the stock go after that?
Yeah. So I think close to about 3,000 rupees.
Oh my God.
Yeah. So
Can we calculate if Karthik had invested 5 lakh rupees?
yeah, no, I wouldn't have invested so much. So actually, this is another problem. All these nice lessons and nice journey, if you ask me what was the capital, then I would be very ashamed to say it. Very small capital. Yeah.
Same.
Big lessons, but small capital.
No, same. But I wanted to ask you this. After the capital increased significantly, I became a lot more conservative. Did that happen with you as well?
I started investing higher amounts when capital became slightly more. My risk-taking capability has remained because I know we should all be asset allocating properly, but mine is equity heavy.
What percentage is equity?
I would say close to about 80%.
Yeah.
I wouldn't advise this for anyone because for a lot of people this gives sleepless nights.
Yeah.
But because my job is related to stock markets, over time I've gotten very comfortable with the volatility of market. Yeah, I can see the market dip 10% and still get my 8 hours sleep.
Correct.
Right, so it doesn't disturb me.
Same.
Yeah.
I think if my portfolio went down by 50%, I would be upset seeing that number, but I won't be worried.
Yeah.
It won't stop me.
Yeah. I think if you're busy in life doing, if you're doing your job, if you have a hobby, whatever, right? If you're busy, then it takes away your mind from your portfolio. Yeah, and I think that has worked for me. So
correct. So Karthik, for a bunch of educators, we've made a lot of mistakes. I think we've been quite vulnerable. But you want to do a summary, maybe?
I think people shouldn't be afraid of experimenting and making mistakes in markets.
Yeah.
But as long as the cost of that mistake is manageable.
I think second point could be you will want to experiment and you will think you have an amazing system you want to try, you've read a book. So to keep yourself safe, do 90% passive. I think passive is very easy to understand, some index. And the last 10%, you can do your jiggery pokeri, your system, whatever. And if that works out, of course, you can expand that. So at least you're doing both. And in case that gap up rally happens, you're not missing the entire thing.
Super important for you to internalize the fact that volatility is the very nature of market. You can't run away from volatility. Be super comfortable with volatility to an extent where despite that volatility, you should be able to sleep peacefully at night.
This is fun.
Yeah.
Thank you so much.
Yes.